Hi everybody, this is Gary Dean, and this is our weekend video report for Sunday, November 15th, 2015. So the markets got clobbered on Friday, and there's good news and bad news. Bad news is, I covered my shorts on Thursday, and, it was just a bad entry. That was really the biggest thing. And when I was down a lot of money on them, if I can, walk away with losing a couple $100 instead of a ton of money, that's the reason why I stepped out of them. The good news is the pattern that I was following is pretty much following it to a T. So this is the Nemo that I've been showing in the fractal pattern, which is in the red right here, where the Nemo came down, bounced up, and then came down, and this was the rally in 2014, October 2014 into December, and we had a 100-point drop. So we had the bounce in the Nemo and down, and right now we are closing in on 100 points to the downside. So why did I take a third of a long position? And by the time all of these technicals and everything turned back the other way to the bullish side, the S&P was pretty much right back at the highs again. So if it's going to follow this pattern, it's not going to give anybody a chance to get back in. They're going to make them chase from on some type of gap up. Now, I'm not sure if it starts Monday or maybe Tuesday, but that's why I took a third. But my point is that most likely, if it's going to follow this, they're not going to give anybody a chance to get in, and we're going to get, one of these moves. So that was pretty much it. You can see that we had everybody that was buying calls down here looking for 2150 to come into play. And now we're into the put area, and we are actually, you can see that the S&P is closing in on some support, and now the majority is bearish on the markets. So it's one of those things, like I said, they're not giving anybody a real chance to get in or out. They're making them jump blindly, especially if you're a trend trader, because if you were a trend trader, you were bearish on this market this entire move, really, until this, this pivot right here was taken out. So you made a little bit of money on the upside, and now you're back red again. And that's what I mean by their, these algorithms and these master planners, that are just turning the switch on and off. They're just trapping a lot of people. So my point is, yeah, it sucks that I got out of my put positions. I would have liked to, obviously made pretty decent money on them, but I just don't like rolling the dice. And if when somebody gives you a second chance to get your money back, I kind of take it. But it would have been nice to hold them. So let's move on to our regular charts. I'm going to show you a kind of bigger picture thing, and this is for people that want to have an idea that what could be playing out in the future. Now, I'm not trading this, but it's something that I think is worth showing. And this is a weekly chart on the S&P, and what I'm showing is, if let's say we're making this fifth of a fifth here, once this completes, let's say it completes at 2150, where everyone thought it was, this is the target zone of the next move down, and if this is it, it's actually it's a bear market that would be pending. Now, excuse me. The thing is, you just don't know where this wave 5 is going to end. But my point is, once this does complete, we probably are going into some type of bear market, and it's going to be, you're going to see the S&P trading somewhere down here. So again, not something I'm saying is happening now, nothing I'm trading, but I think it's something that is worth noting, because it's especially the way that this market has been trading here, that usually means it is some type of fifth wave. So if we take a look at the daily chart and what we are in right now, you can see that we're at the 38% retracement. I said this is usually the bare minimum after 5 waves up on it. And you can see we have support at 2007. So if this, let's say we open down on Monday, I'm going to be looking at the 2007 and the 1991 as far as where I'm going to be looking to layer in my next position. And I don't think it's coming down to this 1962, but there's a chance it could. It's not really, wouldn't really add up if it did, just because this probably wouldn't be, your 5 waves up. It would be something else that's in play. But anyway, we're at some support right here, and this is, why I took the third of a position, and if it goes down, I'm going to look to add there. What is suggesting that it's, let's say we're not done on the downside, is we don't really have any bullish divergences. So what may happen is we can get some kind of bounce, maybe up to the 2039, maybe it goes a little bit higher than that, and then actually come down again and maybe test the 1994 or a little bit lower, that like the areas I was just showing you, the 2007 or the 1991. And then what will happen, that will pull our technicals up, and then if it comes down and makes those, that other low, then we're going to get the bullish divergences, and that's probably going to set up the rally. Now, one thing I will say is that they don't really always give you bullish divergences, especially with them when they just make those, short covering rallies. So there's no guarantee that we're going to have the up and the down, but it just makes it a little bit easier to look at things through a technical basis. So another thing is this is the bullish wolf wave here. So you have 1, 2, 3, 4. A break is that this is allowed, and what I do is I just copied this trend line here and put it here, and you can see we're at the bottom of the flag right here. So if I remove this is what it would look like. This is the channel that we're in right here. So we could pop up and down, or once we break out of this, the anticipation would be for to move back up into the 2087, maybe the 2090 area. And if it goes higher than that, then this is the larger, say, wave 4 down. So it would be your 1, 2. I'm sorry, hang on one second. Okay, so what it would be is 1, 2, 3, and then this is the 4, and then 5 up. So again, I don't want to confuse you with Elliott wave stuff, because you don't have to know that. Just know that in this area, it would make sense for the turn to make that wave 5 up, and again, the targets would be, anywhere up in, these areas, or possibly a little bit higher than that. 15-minute, you can see that we do have some bullish divergence there, so it is actually supporting some type of bounce, and it, most likely you're going to see, if the bulls can push it through the 2041 area, or 2041, 2040, then we're most likely going to see a move up to the 2060. So right now, it would make sense for some type of little bounce. I'm not sure if it comes, Monday, or maybe they have to pull it out for Tuesday or Wednesday. But if it's going to follow that fractal pattern that I've been showing you, most likely we're going to get that pretty big bounce that's going to hit. So with that, enjoy the rest of your weekend, and I'll talk to you guys tomorrow.